Good day, Red Hot Storm Trader, and welcome to the first webinar for the second quarter of the year. So today I want to talk about mainly the Aussie and why I've been quite hesitant to send out a trade this week for good reason, and that is because the market has no idea where it is going. Okay, so we can start off in June 2017 up until let's say January, where there was this decent uptrend. It was going up on a 45-degree angle, which is a healthy trend. And then there was the first gap with the falling soldiers. So these are the three falling soldiers that say, hold on, there's a lot more supply than anticipated. And so you could have expected the market to drop further. And a lot of people were expecting a bounce on the uptrend. And I most definitely wasn't. And the reason is because it didn't show any form of demand or buying levels because of these three falling soldiers, which normally breaks through. And just as thin ice works, it did break through the uptrend. And once it broke through, I saw this pattern. It's strange. Only once it broke below, I saw the pattern. And that was this M formation that formed. Now this M formation is a breakout pattern, which is a reversal pattern to the downside from when it was going on the uptrend, broke below, touched the support of the M formation, and then I said that the market is going to drop further. But during this time when there was a new president in South Africa, optimism was up in leading markets worldwide, and then I sat down with my team and I said, guys, I don't know why, but the market is saying it's going to come down. I didn't have any justification why it is coming down except the chart. So I wrote an article, if you don't mind me going here, saying, is the JSE going through a correction or a crash? At the end of this video, I will send you the link so you can have a read through it and you can see why I expected the market to drop below. And a lot of people were skeptical, and fundamentally I was also skeptical, but the system is the system and the charts are charts. So it broke below and I saw the breakout, and then I said that the next target formation is at 47,160, okay, on the Aussie, which it didn't go initially. It showed that there was a little bit of traction to the upside that was during this movement. But for some reason, the market just kept saying that it's going to test these levels and then it's going to break down, which is exactly what it did. And it actually hit my target. And now it's showing either sideways congestion movement or a potential move to the upside again to close these gaps. Now, gaps are very dangerous in the market because that incites volatility. And no matter which shares you go through, you'll get shares that are down sometimes 2%, for example, Pick and Pay. And then the next day it's up 3%. So like, for example, Sasol up 3.3% today. But the general markets have dropped quite tremendously. Even the banks have showed a lot of downside, and insurance companies. So that's why I've been very hesitant to send out a trade, because if we went short, we would have gotten stopped out, and if we went long, we would have gotten stopped out as well. And what's important is sometimes being neutral is key. So because there's no open positions in Red Hot Storm Trader, luckily, we can't lose anything. But as you might think, there's an opportunity cost for other companies that we could get into. That's true, but right now it is a big gamble, and I prefer high probability trades to medium to low probability. So I'll be watching these levels. I'm going to wait for these markets to close these gaps. I will most definitely send out a trade next week, okay, because it is due. And if no trade shows a high probability, I will reduce the time frame to 30 minutes, 1 hour time frames, and I'll be looking for charts showing that there is correlation to the upside to come, or vice versa. If the market drops down, we can short the market as well. Okay, but in the meantime, I'll send you the link, and have a watch this video again just so you can see the M formation, and you can see the breakout and how the trading works and how it even tested these uptrends. You know, it tested this resistance and it showed that there was no reason for it to continue up. And also, even from November last year to January this year, this lower high signals that there is a higher probability of this breakout formation to continue to the downside. Okay, because I'm not a big fan of trading indices as much as equities, I left it at that, and I let the index drive up or down the equities, which I can trade. But at the moment, this is a sideways movement, and I just do not see any trades right now, okay, in the pipeline. But I will be reducing time frames, and I'll be waiting and watching for very careful trades. And remember, you have to reduce your risk to below 2% per trade because of these volatile conditions. The key to trading is longevity, not making money quickly. If that was the case, I wouldn't have been in the industry for 15 years. So you can think of it as a long-term investment of trading short-term trades, which is going to drive up your portfolio eventually. Okay, so that's a lot to work with, and I'll send you the link, and I hope you enjoyed this video, and I will see you soon.